Navigating borrowing or investing through peer-to-peer apps can be overwhelming, especially when traditional financial systems feel restrictive, slow, or unforgiving. When faced with an unexpected expense or looking for a way to earn passive returns, many people run into rigid credit score requirements, lengthy bank approval processes, or opaque fee structures. The anxiety of taking on debt or losing capital to hidden charges often leads to hesitation. Questions immediately surface. Is a peer-to-peer lending app safe? Will you actually get funded at a fair interest rate? Or will subscription fees and platform costs eat away at your returns or inflate your borrowing costs? When examining the overall user experience of Lenme, the platform addresses these exact friction points by restructuring how small-dollar loans operate. Unlike traditional banks that act as single gatekeepers, Lenme operates as a two-sided marketplace connecting borrowers directly with individual investors, businesses, and financial institutions. The onboarding process is designed to be low friction. After downloading the app, users link their bank account and submit basic verification data. The app utilizes machine learning algorithms to analyze cash flow, income history, and credit profile rather than relying solely on a hard credit score hit. For borrowers worried about damage to their credit file during the exploration phase, this soft inquiry model removes a significant barrier to entry. Once inside the interface, the workflow centers on transparency and autonomy. To request a loan, a borrower selects the required amount, typically ranging from small cash advances up to several $1,000s, and defines a repayment window up to 12 months. The request is posted anonymously to a public feed where lenders review applicant risk metrics, including cash flow and credit ratings. Lenders then compete by pitching interest rate offers. This bidding dynamic creates a key advantage for users. Instead of taking a fixed rate imposed by a bank, borrowers receive multiple competing offers and retain full control to accept the term that best fits their budget. However, understanding the true cost of using the platform requires a close look at the fee structure. A common point of confusion for first-time users involves Lenme's subscription model and origination fees. Lenme operates on an in-app subscription basis, which unlocks access to place loan requests or fund deals. On top of subscription costs, loan origination fees and interest rates offered by lenders vary based on risk. For example, a $1,000 loan over 1 year at a 12% APR with a 1% origination fee results in predictable monthly payments. But failing to factor in the platform subscription fee can skew your expectation of total borrowing costs. For lenders, risks center on borrower default, though features like crypto-collateralized loans have been introduced to mitigate risk by allowing digital assets to back cash advances. From a visual and functional perspective, the user interface remains clean and accessible. Clean navigation tabs let users effortlessly flip between borrowing and investing modes. The live feed provides real-time market insights into active loan requests and prevailing interest rates, helping both sides benchmark fair value before committing. Notifications keep users updated as offers come in, and once an offer is accepted, funds are dispersed via automated bank transfers within 1 to 2 business days. To make the most out of the Lenme experience, here are actionable takeaways for both sides of the platform. If you are borrowing, calculate the total cost of capital before accepting an offer by factoring in the interest rate, origination fee, and app subscription cost combined. Request amounts that align clearly with your verified monthly cash flow to ensure higher approval odds from competing lenders. If you are participating as a lender, mitigate risk by diversifying capital across multiple smaller loan requests rather than committing large funds to a single borrower, and monitor risk scores carefully. Lenme offers a streamlined, user-centric alternative to traditional credit, provided you evaluate the full cost structure before executing a deal.